In this presentation, we will discuss capital projects funds as it relates to governmental accounting. As we go through the capital project fund characteristics, we want to note and keep in mind that the way I would think about the governmental accounting is that we have the government-wide type of activities, thinking about the entity as a whole, recording the activity as a whole and on an accrual basis, the normal basis, the basis that we would be more familiar with. Then we think about the fund accounting types of items. The fund accounting largest group is the governmental type funds, of which the capital projects fund is a part. When we think about the governmental funds, they're going to be on a modified accrual basis. So we have the government-wide type of activity, accrual basis, then the fund type of things, the fund side of things, including the capital project fund used when we have a large type of capital project. We're making something like a building, something like a bridge. Keeping that in mind, let's go through the characteristics. Capital projects funds allow for revenue and other financing sources for a particular project used for that purpose. That's what we're going to track within the capital project fund. So when we think about the capital project fund, we're tracking the revenue and other financing sources. And note, obviously, when we set up a capital project fund, we have a long-term type of project, and therefore we're going to track the revenue and other financing sources possibly being a larger source of the funds that we're going to be getting, because when we're making a capital project, when we're making a building, a bridge, a library, we may not be having revenue that's going to be financing it, but some type of other financing sources, possibly from a transfer from other funds or through some other type of financing option. They exist until the project is completed. So when we set up a capital project fund, if we're making a building, if we're making a bridge, we're going to set up the capital project fund. We're going to track the activity as we go through the process of making the building, making the bridge. Then at the end of it, the capital project fund has served its purpose. It's tracked the information for the life of the project. And then we no longer need the capital project fund. We can at that point close out the capital project fund. Note that we do not record the debt incurred to finance the capital project within the capital project fund. And this will be a little bit confusing until we actually record these items. Once we record these items, it'll make a lot more sense. Remember that we have the government-wide type of activities. That's going to be on the accrual basis. That's where we may, say, have a bond or something like that that we're going to use to help finance the capital project. We're going to record the liability on the government-wide type of activity. We're not going to record the liability on the capital project fund. It's going to be on a modified accrual basis, and therefore the liability related to long-term financing is not going to be tracked on the modified accrual basis. It's only going to have current liabilities and current assets being tracked in the fund because it's a governmental fund using the modified accrual basis. The capital project funds do not use appropriations and estimated revenues like other governmental funds. In other words, we don't have the budgeting type of accounts that we typically use in other type of funds, and that's going to be something that we record at the beginning of the period. At the beginning of the period, when we talk about governmental type funds, we often record the estimated revenues and appropriations in the governmental type funds, something that we don't typically do in for-profit accounting, something we don't do in normal accrual accounting, something we don't do on the government-wide level, which is on an accrual basis, but often done in other types of modified accrual bases in the governmental type funds, not necessary within the capital project fund. However, we do use encumbrances, and that's usually going to be used when we have a construction contract that's going to be awarded. The encumbrances is going to be something that we use. It's basically kind of a holding account that we record before the expenditure can be recorded. So in other words, when we have a construction contract, when we sign the construction contract and say, hey, we're the government, we've got a contractor, we've assigned the contractor to make this building. Well, typically when that happens in a for-profit type of organization, that's great. It's a significant time, significant moment, but no financial transaction has been recorded because we haven't paid the contractor and the contractor has not yet done any work, and therefore nothing is due at that time, and therefore we can't record any expense or liability at that point in time in accordance with normal accrual accounting. However, for governmental accounting, we want to post the fact that we've got the contractor. It's a significant point. We want to actually see it on the general ledger. Therefore, we're going to record the encumbrances at that point in time. Encumbrances kind of like a holding account, recording an expense of the contract itself before we can actually record the expense in accordance with normal accrual accounting or modified accrual accounting. So we're still going to have the encumbrances within the capital projects fund.